game up?
Yes.
Oh wow.
Yeah.
Non-stop.
They're all, yeah. It's been good though so far. Nothing too bad. Ooh, ready to go.
Good to go. Yeah. There you go.
Good afternoon, everybody. Now presenting Adam Zaglul with NTG Clarity.
Thank you, Juan. Okay, good afternoon. Hi, everyone. So yeah, my name is Adam Zaglul. I am Vice President, Strategy and Planning for NTG Clarity. And I guess I'll just get started with a quick high level on NTG. You know, we are an IT services company with a focus on, taking advantage of as much of the Saudi Arabian digital transformation and software development market as we possibly can. So that's our focus markets where 95% of our revenue comes from. And on the agenda for today, I'll take you through sort of an introduction and a high level on the company, and then finish things up with a little bit of a Q&A, if that works out. So, normally where I like to start is what people normally think of, I think, when you mention Saudi Arabia. Desert, there's oil, maybe it's a little bit of an emerging economy, maybe not very much else going on. But definitely in the last few years, this is more of the image that they're striving for sure. They've got their Vision 2030 economic development plan, which really seeks to diversify the economy away from the traditional oil and gas cycle and really become a hub regionally for everything from finance, technology, including a large startup incubation and acceleration program, sports and entertainment. They're hosting the World Cup in 2034 and all those kind of things. And also infrastructure, of course. You've seen headlines about the line and NEOM and cities out in the desert and everything like that as well. Overall, there's $1.3 trillion of investment earmarked in the overall Vision 2030 strategy. And our line of business, digital transformation and software development, is a huge part of that. So that's where we come in. NTG Clarity has basically more than 20 years of experience working in the Saudi market, delivering software development projects. So we think that, as a TSX venture listed company, we offer a pretty unique opportunity for investors in North America to get some exposure to a part of the world that's growing rapidly, Saudi Arabian economy, but also that's potentially largely uncorrelated to a lot of the more volatile markets in North America right now, for sure. But that being said, our core line of business is building software development and engineering teams that help deliver end-to-end software solutions for some of Saudi Arabia's largest banks, largest telecom operators, as well as system integrators, IT organizations as well. We're on a pretty strong growth trajectory. The Saudi market in general is growing fast, but over the last 3 years, our CAGR for revenue has been over 60%. We just posted our 2024 year end, where we saw more than 100% year-over-year revenue growth, and we're targeting $75 million in 2025 for revenue, which is going to be another 35% growth. So I think what really makes NTG unique is our workforce being based primarily out of Egypt. So right across from Saudi Arabia on the Red Sea there. Now, when you traditionally think about software development, outsourcing and offshoring, you can think about other destinations like maybe India or Pakistan or the Philippines, places like that. You can also think about the cost savings that come along with it. When you outsource out of Egypt, like NTG offers, you'd still get a lot of cost savings, up to 50% compared to hiring locally on site in Saudi Arabia. But it comes with a lot of cultural benefits for our Saudi customers, like Egyptians speaking the same language, they're working in the same time zone, having a similar general cultural background to the Saudi clients as well. It really makes for better collaboration and better results that way, for sure. Talk about NTG's main lines of business. So I mentioned outsource, offshore software development solutions and services. That's the majority of our business, being at about 94% of our revenue. Now that breaks down into both on-site and offshore services. We offer the services on-site, where our employees will be relocated to work at our customers' offices in Saudi Arabia, Riyadh primarily. But we also work offshore from our Egypt offshore center based out of Cairo. That's for the cases, there's a lot more cost-effective working offshore out of Egypt, but you still get the quality resources that the Egyptian talent pool has to offer. But when you think about these services, it really is anything that our clients need for the end-to-end software development lifecycle. So it is going to be full stack developers themselves, but also any sort of support staff that's needed along with them. So, business analysts to do scoping, project managers, UI, UX designers, really anybody you need for end-to-end software development, we will contract out to help our customers build out their digital infrastructure. Now, the contracts themselves are typically structured around, the number of resources that we're placing with our clients, and they're typically billed monthly as opposed to other software development companies that work on a more, milestone-based, project-based model. Now, I want to talk a little bit about our secondary line of business, which is our proprietary software products, namely NTG apps. That's our flagship digital transformation platform. If you're familiar with no code, low code, that kind of paradigm, it really fits into that. But allowing our customers to develop full stack applications without needing any actual software developers themselves. You can think drag and drop interface builders, drag and drop workflow builders, that kind of thing. Helps our customers build really anything from a full scale enterprise resource planning platform all the way down to more niche use cases for IT tickets and telecom field service management. Those are a couple of other example use cases as well. But what we're excited about is, it's growing as well. Maybe not as fast as the services line of business, but in 2024, we saw 18% year-over-year growth. And about half, 47% of our existing customers are at least trialing or have a proof of concept project going on NTG apps. So longer term, we see it as, a cross-sell, upsell opportunity to bring, higher SaaS style margin line of business to our business, but also some revenue expansion as well. Talk about, the NTG advantage, our 3 steps to success, why we've been growing, say, 100% year over year in 2024, targeting another 35% in 2025, more realistically, 15 quarters of last 12 months revenue growth that we've been seeing. The first is, the amount of time that we've been in our target market of Saudi Arabia. We've been working there more than 20 years, and it's let us really build the relationships that we need with the key decision makers in the IT sector in Saudi Arabia. So we've been able to, build a relationship with them, win their trust. They like the quality of the services that they're getting at the price, and are continuing to, renew their engagements with us at even larger levels. The second is, on the talent pipeline side, this time based out of Egypt. So we've been partnered for decades, really, with a lot of educational institutions based out of Egypt to offer things like, summer training programs, summer projects, just education and upskilling in general to get both new grads and university students ready to work in the software development world. But we really took that a step further in 2023 and again in 2024 when we opened another one, but we are opening our NTG School for Applied Technology. Now, these are brick and mortar on the ground, dual curriculum vocational high schools based out of Egypt in partnership with the Ministry of Education, with the idea being, give a little bit of computer focused training to high school students, getting them interested in the software development world and, interested to take the next step and go on to post-secondary down the line. So able to make some connections for our talent pipeline that way. And the third key pillar is really investing in decision makers of the future. This is also educational, but this time on the Saudi side instead of the Egypt side. We're in the process of setting up a lot of the same partnerships with Saudi educational institutions, with the idea being that, number one, yes, Saudi's nationals need training in software development and technology to be able to usher in, the new digital era in Saudi Arabia, but also with the understanding that Saudi nationals tend to also be more the managerial class in Saudi Arabia. So knowing that they'll be the decision makers and the managers of the future who are going to be able to award us a little bit of new business as well. Now, by this time, I like to go through, an actual example of what kind of projects we're working on, what the actual work on the ground is that we're doing. This example is for a system integrator in Saudi Arabia who does a lot of work for the government ministries over there. But the idea was we were contracted to build out apps for tourism purposes. Now, if you're familiar with the Hajj and Umrah pilgrimages in Mecca and Saudi Arabia, Hajj is probably the largest annual gathering of people in the world, so huge tourist operations. But we were basically contracted to build out, a little bit of visitor-facing mobile app systems that tied in with some government-facing internal systems as well. Basically, a visitor or a tourist would be able to log on to this app. They'd book their visits to the holy sites, manage their experience through there. That would feed into the government system that would basically do logistics and crowd management. You only want X amount of people to be visiting a holy site at any given time. You want to manage the crowds, that kind of thing. So we built the end-to-end system to manage this, and the work is ongoing at this point. But some key highlights from this is, number one, I mentioned, a big part of the reason why we're winning a lot of our work is the relationships that we've built in Saudi Arabia over the last 20 years or so. And this is an example of how that plays out. Realistically, the decision maker in this example was a CTO for this company. And he was referred to NTG by somebody in his network who had worked with us in the past and liked the quality of the work and the prices that we gave him as well. So it showcases the real strong network effect that we have. But it also showcases, the strong suit of our talent pool. NTG is probably one of the biggest outsourcing operations out of Egypt at more than 1,000 employees right now. So it really showcased how we were able to put in place the talent to work on this project. We started originally with 10 senior resources to sort of lay the groundwork, develop the early systems, get started on the core functionality. And over the course of about a year and a half, 2 years, the engagement grew to be 200 resources that are placed with this customer at this time. So definitely one of the few organizations that are able to field, engagements of that size with an outsourcing based in Egypt. So all the results from those successful engagements are definitely showing in our contract wins as of recently. Over the last, say 8 months or so, definitely in the last half of 2024, a big theme has been us winning increasingly large contracts for increasingly long durations. Like it's definitely highlighted back in August, we signed a $53 million 3-year contract with a large customer, another $22 million contract in December for 3 years as well, all of which adding up to a total backlog right now of POs and contracts on hand of about $105 million with visibility of revenue out over the course of 3 years. So that's also piggybacking off of our already 15 quarters of consecutive last 12 months revenue growth as well. The success of our model is definitely showing in a lot of our operating KPIs as well around customer retention. In 2024, we saw an overall 25% increase in the absolute number of customers that we had over 2023. And these customers themselves contributed about 15% of our 2024 revenue as well. So we're seeing some momentum from those new logos too. In terms of customer retention, 90% of the customers who worked with us in 2023 continued to do so in 2024. And of the customers that stayed, the majority, 54% of them, increased the level of service that they contracted us for. Our average billings in 2024 per customer went up about 75%. So we're seeing huge growth in the existing customer engagements that we have. And that all plays into our overall recurring and reoccurring revenue number of about 85%. And that's either recurring revenue where we have one of those explicit multi-year contracts with one of our customers, or more reoccurring, which is, yes, the customers are on an annual contract, but they have been consistently renewing that contract for 2 years or more. So I'll talk a little bit about the financials. I mentioned we just posted our year-end 2024 results. And the headline of our story is definitely the revenue growth that we've been seeing. I mentioned 60% compounded annual growth rate over the last 3 years. In 2024, we saw 102% revenue growth for $56 million in revenue. And that's leading into 2025's guidance of $75 million in revenue. I know it's a little bit less percentage-wise, but we're definitely hitting our law of large numbers here. It is 19 million in incremental revenue, about the same ballpark, but the moral of the story is the growth is still on the menu for sure in Saudi Arabia. There's a lot of growth still to come, both into 2030 and beyond that as well. Carrying down the income statement though, talking about gross profit a little bit, we expect our services business to have gross profit margins in the range of about 35 to 40%, really depending on the mix of, say, on-site work that we're doing versus offshore work that has a little bit higher of a gross margin as well. There is potential for margin expansion past that if NTG Apps, our software offering, takes a little bit more of the market share and brings with it, more SaaS style gross margins, 50%, 60% plus as well. But 35 to 40 is more typical what we're expecting. And in 2024, we posted a 37% gross margin. We also posted adjusted EBITDA for 2024 being about $12 million or 22%. We are profitable on the adjusted EBITDA line, but also net income. Our net income margin was about 18% for 2024 as well. But shifting to a guidance of adjusted EBITDA, we're looking at for 2025 somewhere in the range of about 16 to 20%. It is a little bit lower than what we posted for 2024, but the thinking being, there's a lot of investment that's going to be required to continue the scale up into 2025, both On the corporate side, systems and processes, investments in that sense, new office and equipping that and everything like that. But the core expense we're expecting is, with people. A big part of our expenses are, hiring employees, training them up, getting them ready to be placed with our customers. During that time, they will be billed in our G&A line until they are basically deployed with our customers and moved to that cost of sales. So, a little bit lower of an adjusted EBITDA guidance for 2025 gives us the flexibility we need to onboard some new employees and train them up to our standards so that we're not, basically deploying employees before we're sure that they're up to the quality that our customers expect for sure. It could work out in the same way that 2024 worked out, where we kept that ratio of billable and non-billable employees pretty tight, and we were able to post a nice strong margin, but we definitely wanted to give ourselves the flexibility there. One other thing I want to mention as well is, we are cash flow positive from operations. In 2024, we posted a $2.6 million operating cash flow, as well as a $1.6 million free cash flow as well. That's on the uptrend, and we're expecting that to improve over the next few years. Realistically, the biggest drag on our cash conversion has been accounts receivable, which is a pretty natural byproduct of the 100% year-over-year revenue growth that we've been seeing. As that starts to moderate over the next couple of years, 35% revenue growth, definitely expecting to see less of a drag from that accounts receivable. So hopefully be able to post some expected better cash conversion as well. Talk about capitalization structure to start with. We're in a pretty strong cash position right now. We've got just under $5 million of cash on the balance sheet as of the end of 2024. It means that we're in a pretty good position to keep the organic growth that we've been experiencing going onto the foreseeable future. And that is the majority of our growth has been completely organic in the Kingdom of Saudi Arabia right now. When it comes to debt on the balance sheet, a lot of investors will ask about it. As of right now, just about $6 million of debt on the balance sheet. The vast majority is management owned, actually, due to the restructuring that we did back in 2019 to focus on this outsource offshore model. So it's management owned. Its effective interest rate is less than 1%. Management really decided they wanted to get the company, on its feet and rolling with this new model, not impact the cash flow too much. And it's on a pretty consistent repayment plan of about $150,000 a quarter, and that's the plan for the foreseeable future on that as well. But overall, 42 million shares outstanding, 41% insider ownership, which is the CEO and the CFO, who are both the founding members as well. And the remainder, that 59% of that 42 million shares outstanding, is primarily retail. We did a raise with Canaccord back in September to get some capital to fund the big contracts that we got towards the end of the year. And that was primarily their retail network as well, with very little, large, significant institutional interest at this point. But overall, NTG is really a company that has deep roots in the market in Kingdom of Saudi Arabia. We've been operating there for more than 20 years, where we've been giving them, cost-effective software solutions and services that they really come to rely on in terms of quality as well. We're profitable, we're capital light. There's not a lot of, capital expenditures that go into maintaining our growth for sure. And there definitely is a lot of scalability when it comes to, the improved net income and adjusted EBITDA margins that we've been posting over the last couple of years for sure. We're really early to the game of outsourcing based out of Egypt, so we're sort of a first mover in that respect. And overall, we really think that North American investors can find a really good opportunity to get some market diversification with an investment in NTG for sure. But with that said, I want to thank you for your attention for this presentation and open it up to any questions that you might have. Thanks. Yeah. Mm-hmm. That's a good question for sure. Yeah, so I'll start on, OpEx or CapEx concerns coming out of Saudi Arabia. You definitely see a lot of headlines around that. Scaling back NEOM is a really good example for sure. Definitely in the uncertain times around, all the volatility in the markets right now, there are concerns of, economic slowdown, maybe drops in oil prices, that kind of thing affecting, Saudi's ability to float projects. I would say a couple of points on that is the types of projects that they're scaling back are definitely sort of those high prestige type of projects, building out large infrastructure in the desert. The projects that we see as being relatively safe really are core to the Vision 2030 strategy. So the ones that are going to get the economy diversified away from oil and gas. So the digitization and technologization projects as well. So our experience is we haven't seen any slowdown in IT spending specifically. The slowdowns have been, those large prestige infrastructure projects, those kind of things. Those seem to be the first ones to go when the funding gets contracted a little bit. So our experience definitely is the IT services are relatively safe. The secondary point to that is also, we're a relatively small part of the overall Saudi market. I think as of this year, the estimates are it's about a $50 billion a year market, and we are, 50 million in revenue, 0.1% market penetration. And so we've been able to grow much faster than the market rate right now, even with the slowdown. I would still see growth on the menu for a couple more years to come, for sure, at least. But other than that, expansion was the second part of your question. And that is a really good point as well. Other Gulf nations, Qatar, Kuwait, UAE, you mentioned, they're all countries that have similar digitization and diversification efforts going on in the same vein. So, and just because of the culture and geography, they would also be pretty well serviced from the Egyptian model that we have going on right now. So it's definitely something that's on our radar. I would say our number one priority, though, for the foreseeable future is the organic growth in Saudi Arabia, just because we have such a small market share. We want to put as many resources and as much attention as possible into continuing the growth in there. But, more medium to long term, we would definitely see entrance into that market as being, maybe the next priority down the list. And our thinking is, that part of the world, for sure, relationships are key. Building this 20-year track record of quality work and consistent competitive pricing is really important when working with a lot of other companies. So what we're thinking is, potentially scoping out acquisition targets who have that sort of similar track record in both in Saudi Arabia with customers that we don't have, but also in other Gulf countries who would be a good diversification lever as well. But very early innings in that sort of discussion. The number one priority is still the organic growth in Saudi Arabia. Yeah, no problem. Any other questions? Yep. Yeah, for sure. The competitive landscape, like as you can imagine, Saudi Arabia is it's growing fast. It's one of the few places in the world where things are expanding, things are relatively stable. So there are a lot of other companies that are looking to get in on the action, I guess you can say. So definitely the large multinational consulting firms. You can think of TCS, IBM, Accenture. Those types of companies are all very active. I would say where we edge out on them is really being based out of Egypt has a lot of advantages. Like we also get to have some price competitiveness, definitely against the big names. But I think the points that I mentioned about the culture fit definitely apply to the large consulting houses. What the more standard model definitely is outsourcing in places like India and Pakistan and the Philippines. So a lot of these big players will bring that same sort of model. And what I'm hearing a lot from our customers, I was in Riyadh just in February, talked to a handful of our customers, and they all consistently said, we were working with large multinationals. They were giving us people out of, let's say, India and Pakistan. And, they were great technologists, right? It's nothing against the people themselves, but, the culture fit definitely started to take a toll, right? You're working in a little bit of a different time zone, but definitely having to, somebody overseas speaking English, not their first language, talking to somebody who in Saudi Arabia, English isn't their first language, you definitely have a lot of collaboration impacts and rework that needs to get done just based off of that. Oh, yeah, sure. Yeah. Yeah. Yeah, that is a really good point. I would say, the first point on that is, really building a strong grassroots network of customers is a huge priority of ours. Like our business is not based on having one key contact in the government who gets us a lot of work, right? It really was 20 years of building the relationships of delivering quality work and good prices to our customers that way. But also, again, treating the customers right with that quality of work and those prices really makes them our best salespeople. Like I was mentioning how, we have a strong network effect and referral effect with our customers. A large part of those 25% increase in customers in 2024 were due to referrals. So really, when I mention, keeping quality high, and that's why, maybe our adjusted EBITDA margin guidance is a little bit lower than it has been this year. Like keeping the quality high and keeping the customer satisfied is number one because, that's the best investment in the sales force, really. Like our customers are able to go to their friends and go to their network and give us more referrals and give us more work that way. So really just delivering on the promises of quality is probably our number one priority when it comes to expanding, our footprint there. Okay, it looks like we're all out of time, but thank you very much. I appreciate your attention and have a great rest of your day. Thanks.